Good morning, Manish.
Good morning. How are you?
I'm doing well. How are you?
Very good.
So I guess to start, why don't you introduce yourself and the team that supports the strategy?
My name is Manish Bajaj. I am the portfolio manager of Brown Advisory's flexible equity strategy. I've been managing the strategy since 2016. I joined Brown Advisory in 2005. I joined as in the equity research team. I was a financials analyst, and then I was also covering technology. In terms of the team, Brown Advisory has a very deep and a capable research team. We are organized by industry sector, and flexible equities is supported by this talented pool of individuals.
Describe the flexible equity strategy's investment philosophy.
Flexible equity strategy invests primarily in US-based equities. We are seeking to invest in companies that are mid to large cap in market capitalization. It's a concentrated portfolio, but it's diversified across all sectors of the economy. We are long-term investors, and we are trying to invest in companies that have attractive business economics, companies that are run by shareholder-friendly management teams, and companies that are going to grow in value well into the future. We only make these investments when we believe we are getting a bargain. So we are seeking value. We're seeking a lot in return for our money. And that essentially is the flexible equities investment strategy.
So you touched on this a little bit, but maybe highlight some of the differentiating characteristics of the investment approach.
So one of the things unique about flexible equity is the flexibility of investing, and that's why flexibility is in our name. So we do not carve the universe as in style boxes. So we aren't just focused on exclusively investing in growth companies or investing in companies that belong, so for example, to a value index or trade at a cheap multiple. So for us, it's about the business, what the intrinsic value of that business is, and we are buying these companies when we believe that they're trading below its intrinsic value. So we have that flexibility of finding unique businesses which are being ignored by the marketplace and buying them at attractive prices. That, I think, is quite unique. The second is that our long-term focus, just investing for the long term and keeping that eye on the long-term price of value creation. Our turnover of the portfolio is very low. I would say that it's probably 1/3 of the industry. So last 7 years, the turnover has probably ranged below 15%, which is quite incredible. The third thing I'd say is that the philosophy, the strategy has been in place for several decades, more than 35 years. And the strategy has experienced many gyrations. The markets have experienced a lot of gyrations. There have been ups and downs. There are times when growth outperforms value and value outperforms growth. But over a long period of time, flexible equity has come out ahead of the broader markets. And so that's, again, a unique thing about us. So just not focusing on style boxes, just focusing on long-term value creation by these businesses.
So I guess now that we have that background, briefly describe the investment process.
Our research team is organized by industry sectors. So we have analysts who are dedicated to a particular sector. They have deep and wide knowledge of the sector. Each investment idea is championed by an analyst. And we work very closely. It's a very collaborative culture. We roll our sleeves together and we work on names together. We spend a lot of time up front thinking about businesses, thinking about why these businesses are going to be more valuable in the future, identifying the value drivers that'll make these businesses better and more valuable, identifying teams who are running these businesses responsibly and taking good capital allocation decisions. So a lot of time is spent up front in that process, identifying companies. The unique thing about flexible equity is that waiting for that bargain moments. Waiting for the right price when we buy these names. That's how the research is done. And a lot of collaboration, good culture, a lot of debates around these investment ideas.
So now that you've hit the process, let's talk a bit more about portfolio construction. Maybe you can outline the portfolio construction process. And from there, what are some typical portfolio attributes?
We have about 45 names in the portfolio, which is a concentrated portfolio. It is diversified. It is invested across all sectors of the economy. In terms of the portfolio construction, it doesn't necessarily align exactly how S&P, for example, is broken out across various sectors, but it's pretty close. The important thing for us is that over time, we have built some incredible, we have bought some incredible companies that are great holdings of ours. And so the bar of entry into the portfolio is very high. When we are looking at these new ideas, we are always weighing what we already own in the portfolio. And since we own these great companies who are going to be valuable in the future, we don't necessarily have to keep on tinkering with the allocations, etc. So that's how the portfolio is constructed. It's every time we look at an idea, if we like it, we think it fits our philosophy, we like the price. What we have to weigh is what is already owned in the portfolio, and if we have to swap it, we'll happily do it if this is a better opportunity.
So with all that background, maybe talk a little bit about how the portfolio performs in different market environments.
The portfolio has been around for more than 35 years. There are periods when the portfolio does well, there are periods when the portfolio doesn't do as well. And the fact of the matter is, because our composition is different, our stock selection is different from a broad index. But over time, and we've seen many cycles where growth has outperformed value or value has outperformed growth, over time, the strategy comes out ahead. Now, there are periods where we have seen when the portfolio tends to underperform, and that is typically when there is a market drawdown. If there's a sharp correction in the marketplace, we have seen that the portfolio tends to slightly underperform the benchmark. But on the way up, it not only recovers what it's lost, but tends to gain more. Our eye is on the long-term price, and we aren't trying to time the market on a short-term basis. We aren't trying to rejigger the portfolio based on how we think the macro is going to play out. So the companies which we own are doing fine. It's not as if the companies are under any duress. It's simply that investors are rotating out of these companies and moving into these defensive sectors. So that's the time when the portfolio tends to underperform. But as I said, over a longer period of time, the portfolio generally comes out ahead of the market.
Why invest in the flexible equity strategy?
I think it's a unique strategy. First and foremost, we are a concentrated strategy, and the only way I think you can beat the benchmark is really think about concentrations and thinking about long-term orientation, which we are. It has a very disciplined process of identifying businesses that are going to be valuable in the future and buying them at bargain prices. I think the philosophy resonates with our clients. We have a long-term track record of beating the S&P, which is great. And the fact of the matter is that we do not make this distinction. We do not limit ourselves to style box investing, and clients are drawn to it because they themselves don't want to make the judgment of growth outperforming value or value outperforming growth, and that resonates with the clients. So that's the reason for investing in flexible equity.
Okay, so to finish this up, tell us one thing people might not know about you as an investor.
It's an interesting question. I think what I'll point out is that prior to investing, I have an extensive background in industry. I'm a software engineer, I worked in the industry creating software for telecommunications.
Manish, thank you so much for your time.
Of course, thank you, enjoyed it.